Taylor Riggs in San Francisco in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, interim deal considered. The Trump administration has yet to make a deal with China, but Trump's team is pondering a different route. We break down why they're favoring an interim deal with China, but can they get Beijing on board? Plus, workers' rights. Google doesn't want employees talking about politics at work, but federal regulators say you can't prevent that. We'll have details. And baby boom. In today's medical technology series, Wired for Health, we talk to two innovators who are changing the fertility and baby tech industries from products to apps. But first, to our top story. Bloomberg has learned that the Trump administration is considering a new tactic in its trade war with China, and that would be a limited trade deal. So what does that look like? On the U.S. side, that would involve delaying and maybe even rolling back some tariffs. And in return, the U.S. wants Beijing to make commitments on intellectual property and agricultural purchases. To discuss in Los Angeles is Bloomberg's Sarah McGregor. She's been covering all things trade war for us. So, Sarah, the markets on Thursday certainly seem to like the idea of a limited trade deal. What does it involve?
So I think, this would probably mark, if it does go through, one of the biggest sort of breakthroughs, at least in the impasse, since May, when the two sides basically had a text of a deal, and then the U.S., of course, accused China of reneging on those commitments. What it would involve, as you just said, Taylor, is that the U.S. would stop the escalation and perhaps even roll back some tariffs if China agrees to some pretty fundamental reforms on intellectual property, on buying more U.S. farming goods. Of course, this would meet China's needs, because their number one demand is that the U.S. roll back these tariffs, that it stop the escalation, that it get rid of the tariffs that have been put in place since the tariff war began. And from the U.S. side, it would at least get some of those things it's been asking for, it's been begging for from China in terms of addressing IP theft and market access for U.S. companies and narrowing that trade deficit. Of course, this is still a big if. We have some talks coming up next week between mid-level deputies on both sides, and that could pave the way for a senior-level talks in early October.
Sarah, you mentioned IP theft. What other conversations about the tech sector are they having?
Well, the tariffs are predicated on the IP theft question. The U.S. all along has put these tariffs in place because it, of course, identified this IP theft as a national security risk. And, of course, that's meant to protect U.S. tech companies. But, of course, U.S. tech companies are now caught up in the tariffs. We see the December 15th tariffs that are coming up are going to hit for the first time major Apple products like the iPhone, all sorts of other products. So there's a bit of a give and take on this. Well, the tariffs have been predicated on helping U.S. tech companies. At the same time, they've been caught up in this with tariffs being placed on the products that they're sourcing from China or bringing in from China. So all in all, I think everyone wants to see a resolution to the trade war and a way for the U.S. and China to get back to business without this threat hanging over them.
Sarah, we also got a Trump tweet yesterday about delaying the trade tariffs from October 1st to October 15th. That came from President Trump. What did that signal?
So Trump has delayed tariffs before on Chinese goods and then went ahead and gone through with them. So I think, what we've heard the Trump administration, Peter Navarro and Stephen Mnuchin come out and say today and reiterate is that this delay is really about the, politics in China. There's the 70th anniversary on the 1st that the U.S., out of respect for China, doesn't want to hit tariffs on the 1st symbolically. So they're waiting till the 15th. But it also opens a window for these U.S.-China talks to take place that I spoke about earlier. Chinese officials, Liu He, the head negotiator, is supposed to come to Washington to meet with Lighthizer and Mnuchin. So it leaves a window for them to come up with a deal to potentially avert those October 15th tariffs altogether. So we have a lot of balls in the air right now.
Sarah, we're hearing that Mnuchin is saying that Huawei is not a pawn in the trade deal talks. Can we for sure say either way that Huawei is involved in trade, or is that clearly a national security separate issue?
Well, Trump has sort of brought them into the debate himself. When he met President Xi Jinping last, he promised to try and get through those special licenses so U.S. companies could start doing businesses again with Huawei, despite the company remaining on this trade blacklist. Those, of course, have not come through, but all along we've really heard a tie to how trade talks are going with the willingness or non-willingness of the U.S. to give those special licenses. So it's really hard to not interlink those two issues at this point. They're not an official part of the trade talks. We wouldn't expect them to be, Huawei issue to be addressed as part of a trade deal. But of course, it's at least part of the relationship between the two nations, and it's definitely an irritant at this point.
A discussion that will no doubtedly continue. That was Bloomberg's Sarah McGregor. Thank you for joining me. Now, I want to take a look at a company that's impacted by the trade war, specifically Broadcom, which just reported its third quarter results. The smartphone chip maker said that even though it did beat analyst estimates on the bottom line, earnings per share, it reiterated the bearish annual forecast it gave 3 months ago. Shares were slipping in post-market trading. And joining me on the phone is Jim McGregor, a principal analyst at Teresa Research. Jim, sort of give me your high-level look at Broadcom, how it fits into the trade war. They did come out with earnings. Any sort of broad thoughts you can give to me?
Well, it's kind of ironic because they've been hit on two aspects of the trade war. One in their proposed acquisition of Qualcomm last year, where it was blocked over national security concerns, but now they're getting hit because they sell a significant amount, like other semiconductor companies around the world, to Chinese vendors. And with that Chinese door being shut and Chinese vendors being told, look elsewhere for parts, that's impacting them greatly, especially Huawei. They sell a significant amount to Huawei, almost $1 billion.
Jim, is it correct to fold Broadcom and Huawei, as you mentioned, into trade, or should those be separate national security issues?
I think they should be considered part of the trade issue. You have to realize that the entire electronics industry is a global ecosystem, and companies have developed that ecosystem over decades. I can't think of a single U.S. or even European or any Western company that doesn't have facilities, doesn't have engineers, doesn't have people located in other countries, including China, Taiwan, India, other places. Same with a lot of the Chinese companies that have locations around the world. So it is it's a major issue, and these tariffs, this trade war is a major issue for every high-tech company right now, because it impacts their ability not only to trade with their partners, but also even to do business amongst themselves, or actually operate their business with having entities around the world.
Jim, I want to show our TV audience what we're looking at. If you come and take a look at a chart inside the Bloomberg terminal, basically what we're looking at is the price of Broadcom and then the Wall Street's price reaction. They had downgraded that stock, downgraded that price target pretty much in June when the company cut its annual forecast. So I wonder, as you take a look at the company, is the worst behind it, or do they still have a lot of headwinds ahead of them?
They definitely have a lot of headwinds ahead of them, not just because of the trade war, but you have to remember that it's been kind of difficult to value Broadcom over the past couple of years because they've been through this massive wave of acquisition after acquisition. So it's been hard to really get a baseline on that company. I think we're finally trying to figure out what that baseline is, but at the same time, they're facing the same headwinds that every other semiconductor company is facing, and that's the fact that they're losing market share in China, and quite honestly, we may be pulled into a recession both for the industry and the overall economy because of this trade war.
Jim, within your broad analysis of the tech sector of the chip makers, how has business sentiment been? Do you see companies pulling back on some of that tech spending amidst global uncertainty?
Oh, absolutely, especially in the enterprise. Anytime you get a hint of a recession, IT personnel typically start pulling those funds back and start delaying some of those purchases and acquisitions based on what the sentiment or what the outlook of their business is. And with fear of an overall economic recession or even just a slowing of the economy, that's causing concern amongst IT buyers. So we're definitely seeing, and I think you're going to start seeing that by the end of the year with a lot of consumers as well. So it's definitely pushing our industry towards slower growth, if not negative growth, going into 2020 if we don't see a turnaround in this trade war.
A smart recap on Broadcom and all things around the chip makers. That was Jim McGregor of Teresa Research. Thank you for joining me. Meanwhile, Google is going to pay about $1.1 billion to settle two French fiscal investigations. The company has faced years of outrage over the small amount of tax it pays in Europe. One case is a French criminal probe into fiscal fraud allegations, while the other concerned back taxes. Google acknowledged the facts of the tax fraud case, but did not plead guilty. And coming up, the tech IPO roller coaster, Cloudflare, Peloton, and WeWork all make their way towards the public market. But should they expect the same fate as Uber and Lyft? We'll discuss next. And if you like Bloomberg News, check us out on the radio. You can listen to us on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The co-founder of Peloton, John Foley, has gone from Kickstarter to being on the verge of a $450 million fortune. The company started making its indoor exercise bike after raising $307,000 in a 2013 crowdfunding campaign. Now Foley is hoping to raise $1.1 billion in Peloton's long-awaited IPO. And Peloton is not the only tech IPO we are watching. Cloud and cybersecurity provider Cloudflare is expected to price shares as it seeks to raise $490 million in its IPO. Investors will be closely watching the company's trading debut in New York on Friday as another indicator for other tech companies in the pipeline. Meanwhile, anxiety also continues to grow around WeWork's public offering amid a plummeting valuation. Joining me in New York to break down all of this IPO landscape is Bloomberg's Sonali Bostic. So, Sonali, clearly a lot to digest here. I wanted to start with Cloudflare as we await that pricing on Friday. What do you take of the fact that they're actually looking to boost the price range?
Truly amazing. We've been reporting for a couple days that they boosted the price range from 12 to 14. The question is, where now will it price? Obviously, just 2 days ago, we had a lot more optimistic sentiment around some of these big IPOs. A lot of these big IPOs that upped their pricing actually did very well this year. Everybody but Uber and Lyft, really, and WeWork, it's also tumultuous. However, those were considered one-offs in this market that really was valuing growth.
Talk to me about Peloton, which seems to be another fairly big success story. They're out on their roadshow. What's the tone with Peloton?
Well, the tone with Peloton is kind of similar to everybody else. Remember, like we were saying 2 days ago, everything was okay. Today, remember when Smile Direct Club was going to market, they were up. The NASDAQ was up. And so for them to fall so much really has cast a cloud over a lot of these listings that are about to happen, because what's really happening is investors want to see a stronger bottom line. Revenue growth is not enough for a lot of these companies, and we've had the head of investment banking, CEOs of investment banks coming out saying so, which for the first time all year is something we're hearing.
Sonali, what changed?
So for one thing, investor sentiment, we have a lot of people who all of a sudden are saying they want to invest in stocks that are big and steady, value stocks instead of these growth stocks. So remember also there's the WeWork cloud that's over everything now as well, and people are looking for not only companies that are showing a stronger revenue growth, a stronger bottom line, but also governance that they're comfortable with as well. The thing is, if we're at the late stages of an economic cycle and people are worried about the overall environment, people are starting to, at some point, get more cautious as well on what they're investing in.
Well, when we talk about cautious, you earlier were talking about how the NASDAQ was higher. We did see, of course, today another IPO, Smile Direct Club. How did they end up doing?
They ended up down quite a bit, more than 25%, which is something we haven't seen since 2008. We haven't seen since 2008 a company that priced above its range and then went to market and dropped in the first day of trading. Obviously, we saw Uber drop in its first day of trading, but again, Uber priced at the lower end of its range. So you were asking about Cloudflare. We're waiting for Cloudflare's pricing tonight. Whether or not it prices in this range that they've already increased doesn't indicate whether they will trade well tomorrow, which is something I think is scary for investors.
Well, and another thing, Shanali, that is scary for investors is all about WeWork. Yes. What happened?
So we are really waiting here to see if they're going to kick off this roadshow come Monday. Remember, Bloomberg has been reporting all week that the valuation could be as low as $15 billion. To put that into perspective, Taylor, earlier this year, Goldman Sachs was thinking it could be worth $65 billion, which of course is a little over the $47 billion that they had fetched in valuation earlier this year. And so we're watching valuation just go way down. We're in a situation, according to our sources, where SoftBank is considering more private capital injected into this firm to help turn it around in a place where it can go public in a way that would be more pleasing to investors. But all of that is still up in the air, and it's yet to be seen how they're going to get this IPO done.
Well, Shanali, there was also news that WeWork is considering a slew of changes, including removing the founder's wife from their succession plan. Is that enough?
We will see. Remember, they still have the voting shares that Adam Neumann has, which gives him 20 times more power than all the other investors. Depending on how they change their corporate governance, I think is going to be a really big deal for how investors view the stock. You know, if SoftBank does end up taking a bigger stake in the firm, what interests me here is they already have a bigger stake than Neumann. So who controls this company, SoftBank or Adam Neumann? And so, you know, the wife stepping back from succession planning is one thing, but there's a lot of other corporate governance challenges here that they're facing, and they're trying to clear up before an IPO.
Shanali, just finally, as you take a look at the landscape of the IPOs, who's to blame? Is this the banker's fault, the company's lack of profitability fault, the market's fault?
You know, it's from where I sit, and I'm an investment banking reporter, people like to blame the bankers very quickly for pricing an IPO perhaps too high, right? And normally in an IPO, institutional investors like the pop. Venture capitalists really like for it to be stable. But this market's a tough one. All year, again, like I was saying, these IPOs traded very well. They traded up. But now we're in a situation where all of a sudden, it's like in the blink of an eye, it's just not working for them anymore. But we'll see how tomorrow goes.
We will. That was Bloomberg's Shanali Bossack. Thank you for joining me. And coming up, we take a look at how Wall Street reacted to the sudden announcement of Oracle CEO taking a leave of absence. That's next. This is Bloomberg. Now let's continue our coverage of Oracle's new power structure. Bloomberg has learned that the company struggled for more than a year about whether or not to disclose CEO Mark Hurd's illness. On Wednesday, Oracle announced he would take a leave of absence for health-related reasons. Safra Catz, who shares the chief executive role with Hurd, assured investors on their quarterly earnings call that she and company founder Larry Ellison can make it work.
Mark was extremely engaged with the business through the end of the quarter, but now he needs to focus on his health and taking care of himself. As the three of us have always worked as a team on managing Oracle, Larry and I will cover Mark's responsibilities during his absence with support from the rest of our strong management team.
To discuss, I'm joined by Bloomberg's Nico Grant, who covers all things Oracle for us. Nico, why did they wait so long?
Well, Oracle thought for a long time that Mark Hurd's health was a private matter. It should be noted that Larry Ellison, the company founder, was very close friends with Steve Jobs and, sort of knew him through the end of his life. Never had any problem that was discernible that Steve Jobs didn't disclose his health condition or the severity. And Oracle thought that because it had such a deep leadership bench with two CEOs plus an executive chairman who oversees the technology of the company and has the chief technology officer title, they thought that it would be sufficient. The company also has not been known to be the most transparent and has always had a question of corporate governance because Ellison is the largest shareholder and the company, pretty much has disclosed what it wants to.
What do analysts say that you've been speaking to about when and under what circumstances and the timing at which you should be disclosing something like this?
So there definitely is a range of perspectives among the analysts. Ones that I spoke to, there were folks who said, this is a private matter. I certainly hope, it's not true. Off the record, they knew that something was up up with Herd's Health. And then there were some who said, look, this isn't a transparent company in the first place. They really should let investors know, including Jack Andrews at Needham, they really should let investors know so that they have the right to kind of make a decision on how important this is. Everyone agreed, though, that Herd, as one of the two CEOs, wasn't the most consequential executive at Oracle, and that if this was Ellison, who had been facing a similar condition, then it might be even more consequential for the fortunes of the company.
Well, and like you mentioned, Ellison. So talk to me more about that deep leadership bench, which is part of the reason of why they were a little bit so insulated from this, given how many people really can be in charge there.
Yeah, so you have these three people, all fascinating with different backstories. They set up this structure 5 years ago, actually, in 2014, and Herd has been with the company for 9 years now this month. And, you know, the idea is that Herd, who is this consummate salesman, could oversee the sales organization, also oversee marketing, a few business units for industry solutions. Safra Katz does all of the back office things, so legal, finance, human resources, and Larry Ellison oversees the product organization and technology. And so the idea is leveraging the strengths of each of these three people, but over the last year, they've made some changes in that Larry Ellison took away Herd's oversight of the marketing department and very much put that under his own control, having his own chief of staff as well as an outsider he brought in manage a lot of Oracle's marketing efforts at a time when he felt like the brand image was lagging and languishing.
Outside the leadership change, we've got the earnings and the basic fundamentals of the company. Where do they go next? How did their earnings and really next quarter look to you?
So Oracle has been kind of in this in-between state for a very long time. They made themselves a superpower in the technology industry. They're the world's second largest software maker by having on-premise software. And what we saw this quarter is what we've seen in many others, that when it comes to certain applications that run on the cloud, compete against Salesforce, Workday, and others, the growth rates are quite healthy and in the double digits. When it comes to hardware, they make some servers from an old acquisition. That's shrinking, and this huge base of support for all of the customers that they've had over the last 42 years, that has been stagnant, and that's very much the case. And so the company is going to have to accelerate its new database products.
Like you said, the cloud is all the rage. Have to keep pushing towards that. Thank you. That was Bloomberg's Nico Grant. Thanks for joining me. And coming up, regulating big tech workplaces, Google and Amazon are getting an earful from Washington lawmakers on how they treat their workers. That's next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. A story we have been following: Google trying to keep its employees from talking politics while on the job. Now the U.S. government is weighing in. The National Labor Relations Board has ordered the search giant to let its employees speak out on political and workplace issues. That's according to Dow Jones. Joining me to discuss, Bloomberg News tech editor Alistair Barr. So we're just talking politics at work all day long?
That's what we're going to do now, I think. So Google, this has been a long-running thing for about 2 years now, and I find it super interesting personally because Google became the company is partly by letting employees all the way down the organization speak up and say things, and that way ideas bubble up. And some of the great inventions that Google has made is because employees are allowed to talk. In the last year or so, that's now spread into the political realm. So a lot of employees are talking politics rather than product development stuff, and Google in general has been swept into a lot more politics in the last few years. So Google has been trying to crack down on that. some employees have complained and filed complaints to the NLRB, and finally the government is saying basically, on some subjects, employees have to be able to speak out.
Yeah, how much of a distraction is that? I mean, if we're sitting around talking politics all day, to be fair, Google's probably thinking that's a distraction. Get back to business, get to work.
Yeah, I think it's totally backfired in Google's face a bit. They do really value this idea of employees being able to talk openly, but on the issue of politics, really the backstory to that is that some employees have been protesting against the company's decisions to work with the military, for instance, on AI projects, and then also on a censored search engine that they're working on for China. The problem with that is that is basically employees getting in the way of what the company wants to do and causing real problems for it. So I think the background to that was Google was trying to quash that a little bit as well. So they're walking a fine line.
How does Google respond to this?
Well, people we've spoken to in recent weeks, what they would really love is the phrase is "let's get back to work." It's kind of their phrase. So what they would love is employees to still keep talking to each other, but to talk about the new Google Maps thing we're building or something like that, rather than saying we don't want Google Cloud to work with Customs and Border Control and things like that. What they really want is let's talk more about product stuff and make great products.
Okay, all things Google. Thank you. That was Bloomberg's Alistair Barr. Thanks for joining me. And sticking with government and big tech employment, presidential candidate and Senator Elizabeth Warren is going after Amazon. Warren and 2 other Democratic senators called out the e-commerce giant for, quote, ignoring labor laws and fostering work conditions that are detrimental to the safety and basic humanity of its workers. To discuss, Bloomberg's Spencer Soper joins me from Seattle, where he does cover Amazon. So, Spencer, Elizabeth Warren, of course, really coming after big tech here. What is her argument?
Well, this comes after a couple of hard-hitting investigations from BuzzFeed and ProPublica, which both examined Amazon's push toward next-day delivery and its last-mile delivery service, which it's kind of built from the ground up very quickly through a network of contractors. And those investigations found, people being paid by the day under, arguably exploitative conditions, and where safety becomes secondary to getting the packages there on time. And they actually identified crashes and deaths involving this network of delivery partners. So, Warren and the other senators are just trying to turn up the heat and let Amazon know they're paying attention to this issue, and simply distancing a company from the accident through an intermediary company is something they're concerned about and something that they're watching.
Yeah, Spencer, you have to wonder, how concerned does Amazon get about these, or is it just sort of for them, another day, another attack?
Well, if you think about workforce fisherization, this notion of using kind of intermediary companies to distance yourself from liability and the obligations of employing people, that's something that goes far beyond Amazon. And everyone, it seems every company does that in one form or another, and Uber and the gig economy are very big examples. So unless there's some actual regulation or movement toward regulation, they don't have to take it very seriously, because this has been the law of the land for quite some time now.
Well, Spencer, you went to right where I wanted to go with, of course, in California, we're all watching AB 5, which was the law that sort of stipulates you have to treat employers have to treat their employees as real employees and not just sort of contract workers. Any sense that Amazon over in Seattle is starting to get a little bit concerned about how maybe that California law could transition over to a Seattle or more of a federal law?
Yeah, I mean, they would have to be concerned if it gains traction, and even if it simply existed in California, because it's the biggest market for them. But it wouldn't hit Amazon as hard as Uber, because Amazon has multiple systems and layers to accomplish delivery, and a lot of these laws would even hit Amazon's contract partners, meaning the companies that actually employ these people. Amazon wouldn't be responsible. But where it could potentially hit Amazon is in this flex network, where they actually have like an Uber type delivery service where people in their spare time in their own cars can deliver Amazon packages. That's very similar to the Uber model, and that's the kind of thing that could be hit by this California legislation.
Well, another hit towards Amazon, another day. Thank you. That was Bloomberg's Spencer Soper. Now, Mithril Capital, it's a venture capital firm co-founded by Peter Thiel, is fielding questions from the FBI following a complaint by a former employee. This is according to a person familiar with the inquiry who asked not to be identified. The FBI has questioned people close to Mithril Capital in recent months regarding possible financial misconduct at the firm. Mithril Capital has roughly $1.2 billion under management and holds stakes in more than a dozen technology companies, including Palantir, which was also started by Thiel. Coming up, rockabye baby. The baby tech market is poised for explosive growth when it comes to infant care. We'll talk to the man behind the Snoo bassinet on where it's headed. He is the man who many parents consider a sleep savior. Dr. Harvey Karp is part of our MedTech series, Wired for Health. Next, this is Bloomberg. All this week, Bloomberg Technology explored medical technology in a series we're calling Wired for Health, where we take a look at how innovation plays a crucial role in sustaining health. Today, we're looking at fertility technology. The global fertility industry rakes in approximately $25 billion, but its growth is expected to be explosive. In 2026, the industry stands to make about $41 billion in sales. As a result, it has attracted the likes of private equity, VC, and other investors. Now, one of the pioneers of technology created to help women track their cycles effectively is Swedish physicist Dr. Alina Berglund. Her app that's called Natural Cycles is a digital birth control, which is the first of its kind approved by the FDA. Alina, thank you so much, and I welcome you to Bloomberg Technology. So talk to me, how does this work?
Well, thank you for having me here. So as you mentioned, Natural Cycles is the first and only FDA-cleared digital birth control, and it's delivered in the form of an app and a thermometer. So the women measure their temperature in the mouth in the morning when they wake up and enter it into the app, and then an algorithm runs in the background and returns a red day if there's risk of fertility and they have to use protection, and a green day if they are not fertile.
Amazing. So how did that then translate into FDA approval? How was that transition?
That was actually quite a lot of work, and luckily we're researchers ourselves, so our company is not about moving fast and breaking things, but rather it's about having a quality system and a procedure on how to release the app and how to ensure quality in all kinds of aspects, and a lot of clinical research behind it.
How did you come up with this idea?
It was actually based on my own need for such a product. So I was looking for a non-hormonal, non-invasive birth control method myself, but I didn't find an effective such product on the market. So I used my knowledge from particle physics to analyze body temperature to see when I'm fertile and not fertile.
How important is it that it's non-hormonal? Because that's one of the key differentiators between this app and some of the other birth controls out there on the market. How important was that this was non-hormonal to you?
So I think when it comes to birth control, it's really important to have choice, because not one woman is the same as another woman. Everyone is unique and everyone has different needs in different part of their life stages as well. So some women have side effects from hormonal birth control, and then they're in need of another method that still has to be effective.
So we are Bloomberg Technology, which means we talk about data and numbers and math, all right in your wheelhouse. So talk to me about the funding environment. What types of investors are into your product?
So I think women's health in general used to be underfunded and under-researched, and luckily I think we've seen a change in this area in the last 5 years or so. And Natural Cycles has raised $38 million so far from venture capital, and I think it's really a hot area right now.
How do you respond to some of the critics who say that there's been unintended pregnancies?
So when it comes to birth control, unfortunately, no method is 100% effective. And our clinical studies show that natural cycles is 93% effective under typical use and 98% effective under perfect use. And that's around the same effectiveness as the pill, but less effective than the IUD. But either method you use, there might always be a risk of pregnancy. And we, of course, empathize with women who experience unintended pregnancy, no matter what method they choose. But this is something that needs to have be known, and education levels are a little bit too low around that. However, we are the only cleared and FDA cleared in US, and also the only certified medical device as a birth control also in Europe. So we have passed all these regulations. So we are the one trusted birth control app.
So you have this amazing app. Where do you go from here? Where are the next opportunities of growth for you?
Well, I think our passion really lies in providing value and insights from data for women. And our mission is to pioneer women's health with research and passion. So I think there's so much more we can do with the data we have and give back to our users. So we're starting to look into what more insights can we give to her to know more about her body and how she's feeling right now.
Well, as a woman, I'm certainly fascinated. Thank you so much. That was Dr. Alina Berglund of Natural Cycles. Now, of course, this successful fertility app for people wanting to get pregnant can lead, of course, then to parenthood, which has its own opportunities for medical technology and investment. 3.8 million babies were born in the U.S. last year, and with babies has come an explosion of tracking apps and monitoring technology meant for things like naps, feeding times, and health. One of the big struggles for parents, of course, getting an infant to go to sleep. Well, there's technology for that too. Dr. Harvey Karp is an author, pediatrician, and co-founder of the Happiest Baby Company. He invented a bassinet called the Snoo using technology and data. Dr. Karp, you join me now from Los Angeles. Thank you so much for joining us on this new series that we're doing. So I'm fascinated by this. I do not have children. What is the Snoo? Walk me through it.
Well, the basic idea, it sounds kind of crazy, but babies in a certain way are born 3 months before they're really ready for the world. In other words, their heads get so big they gotta be born, otherwise they're gonna be too big to come out. And so your job those first 4 or 5 months is to hold and rock your baby. And even if you do that 12 or 14 hours a day, that's a ripoff, you know, for the baby's point of view compared to what they had before. It turns out everyone knows if you rock and shush babies, drive them in the car all night long, they'll sleep an extra hour, rock in a rocking chair. And now we've created the technology not just to imitate the womb experience, but it's a responsive baby bed. So it hears when the baby cries and actually increases motion and sound, imitating an experienced caregiver. So we're able to add to the baby's sleep, we're able to calm crying, oftentimes in under a minute. And we're also able to sleep train babies so that by 5-6 months, you don't have to go through a cry it out routine. Most importantly, as you can see the little wings on that sleep sack, they attach to the sides of the bed. So we prevent the baby from rolling over, which is the #1 risk associated with infant sleep death.
Well, I want to talk a little bit about how your technology differs from some of the other things on the market right now. Namely, you have scheduling naps, you have breastfeeding and timing. How does your technology sort of differentiate itself?
Well, really, all those are struggling to take a baby out of their natural environment, which is the womb, and make them exist in a very bizarre world. Consider inside, they're constantly held, rocked, and shushed every single second of those 9 months. Then they're born and we put them on the back in a quiet room, in a flat, not moving bed, looking up at the lights. It's a very abnormal position and posture for the babies. And because of that, they wake up much more frequently. So when you imitate the womb experience and when you do that responsively, we've demonstrated, we've analyzed the sleep data on over 7,000 babies. It's the largest sleep study ever done. And we're able to increase a baby's sleep by 1 to 2 hours at a significance level of 0.0005, which scientifically is the highest level of proof you can imagine. Part of the goal, I just want to say that part of the goal is sleep, but part of the goal is also to prevent problems that are associated with the lack of sleep. Postpartum depression, infant sleep death, obesity, car accidents, marital stress, billions of dollars of healthcare costs, and billions of dollars of employer cost because of poor productivity, poor retention, errors and accidents, and healthcare costs. So who knew that crying little babies and sleepless parents really led to billions and billions of dollars of impact on our economy?
Well, Doctor, we talk a lot about advanced technologies. Walk me through how you're also now incorporating cloud, AI, machine learning now into your products.
Sure. Well, the bed, of course, is based on a sophisticated algorithm so that it's able to respond to the baby's need in real time. But our goal is to have the bed respond to each individual baby. Right now, parents can change settings to modify them because children don't just, sleep better and better and better. It's hills and valleys. They go through colds and growth spurts and teething, and so the bed has to adapt when the baby is going through those transitions. So right now, parents can do that through the settings, but ultimately we'll have that through AI. And we're collecting the largest data set on infants that's ever existed in humankind. So we'll be able to analyze that and look for other evidence of issues, problems, illnesses. It's a very rich data set to examine.
Talk to me quickly. How is the funding environment? Who's investing in your company?
Yeah, we've been oversubscribed every round. So what's so great is that the investors, so many of them are young parents. They're familiar with my work, and they're familiar with the stress of dealing with exhaustion. So we've had, in our Series B, our last round was Google Ventures, Greycroft, Bulb Capital out of Basel, but we also have Lux and Obvious and Felicis, who joined us on the A round.
Wonderful. Thank you to Dr. Harvey Karp of Happiest Baby. Still ahead, eSports is seeing explosive growth, but is it sustainable? We'll discuss the future of the industry next. This is Bloomberg. There are more than 2.6 billion gamers in the world, and most consider themselves competitive gamers. That's given rise to esports companies and competitions. In fact, Intel just announced another big esports tournament in Tokyo around the 2020 Olympics. I am joined now by Ann Hand, CEO of Super League Gaming in New York. Super League Gaming operates an esports community and content platform for players of all skill levels. So, Ann, I first have to ask you, we've seen really explosive growth recently. How do you make sure your business is run for the long term, even though recently it can feel a little bit like a fad?
Yeah, it's a great question because in some ways when you're entering a brand new market space, very nascent, don't even really know how to define the edges of the pie of how big commercially this market space can be. Many investors see it as a fad until they have children or grandchildren that game. And then they kind of, the light bulb goes off. They realize that gaming isn't something you grow out of anymore, that they're spending just as much time watching other people video game as they are game playing themselves, and that this is now something that's even becoming increasingly multi-generational. Now with that, I will say, we're very uniquely positioned as the rare pure esports play listed on NASDAQ. Most, though, of the esports activity you're seeing are really private investments. They do have high valuations. And so with all of those things, when it is an early stage space, often people think and worry about a bubble. What I would tell you is this. Right now, the projections for esports is that it's going to be a $3 billion global market in 2023. I used to run a $3 billion business for BP 10 years ago, and I would not get out of bed if that was just what this was worth. So I think it really just goes back to gaming is how people want to spend their time now as a primary entertainment interest, and we're just figuring out how big the category can be.
Well, you IPO'd just about 6 months ago. How has it been being a public company?
Yeah, it's a funny thing. I really believed that I would wake up every morning in LA at 6 a.m. and stare at my stock price all day. And I'm delighted to say I don't do that. And I am fortunate that I have a lot of really supportive, long-holding investors who are excited about our delivery and kind of tell me, don't look at the stock price day to day, just deliver what you said. That said, it is a strange thing that happened. We have a pretty experienced leadership team, top talent from from game publishers like Take-Two, Endeavor, former WME IMG. And what happened is we were a bunch of grown-ups who all of a sudden got a big jolt of adrenaline the day we went public, because it is extremely focusing. And with all that transparency of being public, it also feels hugely empowering. So we often say, we sit around the table now and we talk about opportunities that I don't even think we would have dreamt of when we were sitting there in the small private owned space. So you've got a lot of adults who are taking it seriously, that our credibility is on the line. We know there's a lot of money to be made in esports, and we're determined for Super League to be the leaders in proving it.
Do you see the future of growth in the amateur or more professional space?
Yeah, I mean, Super League completely exists for the amateur. You know, if you look at it, all the excitement, most of the press has all been about the pro level. That's about 10 to 20,000 players on the world. You said it in your opener, there's over 2 billion gamers. You know, and if you think about it, it is like valuing what is baseball worth globally and only looking at MLB. Well, what about not just minor leagues in college and high school, but what about the recreational softball club? What about Little League? And so our whole premise from the very beginning was that that great validation, that aspirational path to the pros is wonderful, but that we were all about the base. We wanted to give everyday gamers a chance to level up and have that same kind of great recreational and teamwork experience that we all had playing traditional sports. We did, I must say though, and it is a hallmark moment, we did just have a 17-year-old coming out of one of our leagues actually get offered a contract to the pros. So while for most of us, just like with regular sports, we'll just enjoy the love of play, we do believe that Super League is a legitimate path as well.
Quickly here, 10 seconds or less, given your vast career history, biggest takeaway?
Biggest takeaway is that timing is everything when you're in an early stage company, and market fundamentals have to have wind behind your back, and the mainstreaming of esports is a real legit thing.
Wonderful. Super League Gaming CEO, that was Ann Hand. Thank you for joining me. And that does it for this edition of Bloomberg Technology. Bloomberg Technology live streaming on Twitter. Check us out at Technology. This is Bloomberg.